Welcome to another episode of Real Estate Wisdom. And this episode number 22 is filled with a lot of excitement, a lot of information, because today we have a guest, Angie Pettyjohn, mortgage advisor from
Sherwood Mortgages.
Sherwood Mortgages. All I know is Angie. And Angie is synonym to mortgages. That's what I'll know.
Thank you.
She is a award-winning and accomplished mortgage broker with over 15 years of experience in the mortgage industry. Angie strives to work for her clients, not the banks, in providing unbiased guidance in the mortgage decisions and achieving their real estate goals.
That's right.
Right. So welcome, Angie.
Thank you, Vishal.
I'm glad you're here and we're meeting after a long time, but I know you do your podcast and I also watch you on social media. Thanks to social media, we all
That's
are
it.
alive.
That's
Right.
it. We feel a special connection because of social media.
I know. That's great. So how things going on with you?
Very good. Very good. This year started off quite well.
Right.
You know, as we all know, last year was a little bit of a hurdle for everybody
Right.
in the industry, clients and professionals alike. But this year has really started off with a bang, so we're quite pleased.
Right. That's great. But my question was when you started your brokerage, and you're working with your daughter.
That's right.
How's that? How's Victoria doing?
Oh, Victoria's fantastic. So we officially partnered in 2021. Prior to
Right.
that, you know, she did everything behind the scenes, made me look really, really good to clients.
Right.
And since, you know, she's now become an official partner. And I really can't do what I do without her expertise. So she's now guiding me.
Oh, wow. That's good. Well, you need that new generation things. It's not like we are old, but the younger generation bringing
Yeah.
the fresh perspective to not only marketing, but also in the mortgage world. I'm seeing
Absolutely.
a lot of new people coming in, joining, and
Yeah.
they are enthusiastic. At the same time, they want to work hard. And with your guidance, with your experience, I think definitely she's doing well. Right?
Yeah, I think our personalities really suit each other. You know, I always say she completes me, I complete her.
Right.
You know, I think there's a Tom Cruise movie somewhere that you complete me.
Yeah.
But honestly, that's how I feel with
Yeah.
our partnership.
Right.
Yeah, like the sky's the limit for us and for her especially, right? Because she's young, she's
Exactly.
enthusiastic, clients love her. And yeah, I could say that, you know, I helped along the way as well.
For sure. You're nurturing her, and she'll be fantastic. And I feel more confident, working with you and with your team. Absolutely, reaching out to my clients and suggesting. As you know, I work with a lot of mortgage brokers.
right.
Work with the banks and everything. So I have that network we call net worth.
Yeah.
And thank you again for coming over here. But let's talk about
Which has
things
happened.
which is happening, right? So I know Bank of Canada just announced yesterday that they're going to stay this way. Oh, it's day before yesterday, right?
Yeah, Wednesday.
Wednesday. That they're going to keep the rate as is, like a 5%. So can you explain the recent Bank of Canada decision to hold the overnight interest rate at 5% and its potential impact on mortgage rates?
Sure. So in order to really explain why they chose to hold the rate, we have to understand where we came from, right? So over the last year and a half, 2 years, those of us who've, you know, held variable rate mortgages know the impact. We had over 10 increases. You know, we're now sitting at a prime rate of 7.2.
Mm-hmm.
So the main purpose of this is the Bank of Canada, Tiff Macklin's role as governor was to stall consumers in all aspects, not just in the housing sector.
Right.
So slow down spending. And the one tool in their toolbox, let's say, is increasing interest rates.
Right.
As we see, it's really had its impact on inflation. Conversely now, because now housing costs is causing stress, right? Because the rates were so high.
Right.
but they had to maintain these high interest rates in order to slow down other aspects of the economy, which it was very successful in doing. We're at that tipping point right now where inflation, I believe in December, the last numbers were at 3 and 3.4.
Right.
So a little bit of an uptake in December, but not enough to spark the Bank of Canada's announcement to say, let's increase this.
Right.
So on Wednesday, they decided to hold firm, which we pretty much suspected it was going to.
Yeah, absolutely.
The Bank of Canada wants to make sure everyone's not overspending right now, because if it's a balance act, right? So if they increase the rates too soon, as we know, spring market brings out buyers anyway. Can you imagine the frenzy?
Tell me about it. This weekend, I was doing the open house, and usually, at these days, open houses, we're getting 3 or 4 people. I have 10 people come in. You know what question they were asking? Are you holding offers? And that's an indication, people already, and this is before announcement happening.
Yep.
Right? So people already started because they know this market is, they're not going to increase the interest rate. And that same thing happened last year as well in the spring when Bank of Canada decided not to increase the rate. And suddenly you see spring market boomed up. Right?
That's it.
Big time.
It sparks consumer confidence.
Right.
And when that happens, Vish, you know this, buyers have to be ready for that.
Exactly.
And everyone's waiting for this special time and the right perfect time. And I always say the perfect time is when you find your home.
Yeah.
Don't fall in love with the rate, fall in love with your home.
Exactly.
Right? And there's ways of mitigating the rate. Perhaps we're looking at more of a shorter term kind of a product versus the longer term fixed variable. There's so many options for people out there right now. But going back to Tiff Macklin, he has a special job to make sure that this balancing act, of this consumer doesn't overreact to them decreasing the interest rates. We're probably going to see that within the next 6 months.
Yeah.
I don't know if March 6th they're going to decrease at that point.
Right.
But we have to be mindful too. He didn't take increasing rates off the table either.
Yeah.
Personally, I think it might be a little bit of a scare tactic.
Yes.
But because we are seeing oil energy prices coming down and other parts of inflation coming down. So we just have to be careful.
Yeah, no, they have a lot of challenges is because in order to control, and you said there's only one tool they had, they didn't have a multiple tool because they cannot build houses, increase the supply suddenly.
That's it.
And with the immigration coming out, we have influx of immigration, people coming in. So supply and demand is still the issue, right? That's not gone away. And yesterday, I saw the news as well. They are 250,000 houses short. They didn't able to, target that was not able to complete.
Yeah.
On top of that, I know you work with builders, and that's what I'm hearing from builders as well. That big banks not financing them. Private lending happening 10, 12%. Cost of construction gone high. Way high. So they're not building project anymore.
Yeah.
So it's going to come into another cycle, in my opinion, in year or two, in 2025, we have shortage of houses.
Mm-hmm.
Right now, people saying, I listed property which is sitting in the market for almost a month and a half. But we know because of the market price, we didn't change the price because I was confident about it. And now, it's this week, I'm getting every day 4 or 5 showings happening. Last night I got the offer. Today when I was almost going to accept the offer, then another offer came in as well.
Yeah.
So multiple offer. Is still though cautious though. And I say they should be cautious about that and say to my clients as well that they're going for 5-day financing conditions.
Absolutely.
Right?
Yeah.
Because anything can happen.
Yeah.
So pretty cautious. So in that way, haven't gone. But I can see that if they get a little bit indication if the interest is going to go out, like people will start going, no
That's it.
financing, no home inspection, no conditions
Yeah,
again.
yeah. That was crazy in 2020. I tell you,
Oh,
people
it's
buying homes, sight unseen also. So I'm glad what has happened.
right.
Slowed that down. The frenzy is over because it's not good for anybody. It's not good for the clients. It's not good for our economy. Falsely inflated property values. It came to a head by the end of 2022 and 2023 when potentially properties had to go back on the market because people couldn't afford these mortgages
No, like
anymore.
when people
Variable holders,
Yeah.
right? Fixed rate holders, not
See,
a problem.
it's like a two-sided, a sword kind of thing, right? It's a two-sided thing because you punishing like people not to purchase, but at the same time, existing homeowners, they feeling the pain. They have no intention of buying anything, just want
Yeah.
to keep their house or their investment.
Yeah.
They going through a tough time. And now with the 40%, I believe like 40% mortgage is coming due for renewal.
Coming up for renewal. Yeah.
It's going to be like a challenging for them, right?
Well, the good news is we are seeing the indications of the rates coming down.
Right.
So those who had to renew last year, unfortunately, were the ones that were really, I would say targeted, but the ones that really had an issue with renewals, right?
Right.
And often what we saw, people either reporting if they had to purchase because their original rate was so low.
Right.
Those that were renewing, maturing,
Right.
we often advised hang on to the current bank because by the time they pay fees for new lenders and that it wasn't worth the move,
Right.
and they often didn't even qualify for their existing mortgage. So auto renew, take a breath, maybe just do a 2-year term in the
Right.
meantime while we wait this time through. That's what we found this last little bit. And moving forward, like I was saying, the good news is the interest rates are on the decline.
Right.
We watch the bond yields like hawks, right? Bond yields indicate fixed rate mortgages. Well, they've been a yo-yo over this last little while, but they've been coming down.
Right. Yeah, fixed rate came out like pretty down, right? So
The rates are closer to 5 now.
yeah.
Whereas, last year we were looking at 7%.
Right.
High 6s, 7s. So that's the good news. So those people who are about to renew or mature,
Yeah.
we always say, make sure your bank is offering you the best rate. So how do you find that out?
Right.
You have to give your mortgage broker a call.
Exactly.
We have our finger on the pulse every day, all the time.
can shop around.
This is our job, right? So the outlook is more positive.
Right.
Is there going to be a bit of a ticker shock for some people? Absolutely. 5 years ago,
Yeah.
we're looking at rates around 2.5. We're looking at maybe 4.5s to 5s
Right,
by the
right.
time they renew.
Yeah, because that was like abnormal. Like it's now I think like it's probably going to settle down around 4.5%, 4%.
Yeah.
Probably around. But I'm going on that not ignoring the potential buyers who in the market. How do you see the decision affecting the housing market, particularly for potential buyers?
Well, I feel, and we've just talked about this, it will definitely ingest some confidence
Right.
in them.
Yeah.
We've seen an uptick in our pre-approvals. Like we've had a lot of people sidelined because they just couldn't afford it.
Yeah.
They're now coming back. They're peeking their head around the corner.
Yeah.
Like, can we do this now?
Yeah.
So it has ingested some confidence into them to potentially start to look. Rates are still on the high side. They still need to be cautious, and still, we still work with them to be within their guidelines. But they're peeking their head around the corner now,
Yeah.
and they so that's a positive side.
Exactly.
On the negative side, as we mentioned, don't wait too long too, right? So mitigating what kind of rate and term you're getting right now. Maybe it's a
Right.
little bit higher rate, but you're getting in the market before everybody goes, now's the time.
Exactly.
and then you're in multiples.
Yeah, I
So-
said, we already seen, rate even didn't stall. And this week, that's what I'm saying. I already got the multiple offer. And you were mentioning about one of your 3.2 mil
Yes.
property, and
Yes.
it went firm.
Firm, a 3.2 mil property multiples.
Wow.
Yeah.
That's already the indication, I know what's happening. And
Yeah.
the window is always small, and people sometimes tend to wait long.
Yeah.
But I think everybody else is waiting, right? And the
Yeah.
floodgates
Yeah.
open.
This is the early bird does really get the worm.
Yeah.
You just have to make sure that you're within your budget, right? Sit down and figure out that budget first.
Right.
Maybe the rate isn't ideal right now, but the rate isn't ideal for anybody, right? So perhaps it's a few extra dollars right now,
Yeah.
but waiting may mean more money in terms of the purchase price.
I'm telling you exactly, this is the thing happened.
Yeah.
Because I was thinking of renting for a little while, but then when I look into the market and said, hey, this is a good time to purchase. Same property was
Yeah.
100,000 more in the springtime last year. And when I purchased 100,000 less, guess what? Pleasant to my surprise, and thanks to my realtor hat, which worked out, which I could work out for my clients most of the time. This time has worked out for me, is I able to get that deal, and my assessment came more than what I paid.
Excellent.
Okay.
Yeah.
And right now, looking into the market, I'm already gaining 50 to 60 grand.
There you go.
So the window is always small. People say, it's go down more, it's go down more. I don't think market is going down more. Actually, now it's a little bit late because market started going
It's
up.
starting to go up.
But it's still not too late, because I think this is the time. If somebody's thinking of buying, this is the time. And
yeah.
the best advice they can get is shop around for sure.
Mm-hmm.
But if you don't have a time to go and call banks and other stuff, because they give different answer and they have all different products. You might think it's the product is same and you're talking the same thing,
Mm-hmm.
but they don't know better than you because you're dealing with them all the time. Mortgage broker dealing with all the time.
Yeah.
So
Well, that's it. It's a time saver.
right.
We're a one-stop shop, so to speak.
Exactly.
Right.
Exactly. Yeah.
And often, it's funny because people will say, "Oh, I'm going to go to my bank."
Yeah.
There isn't loyalty, unfortunately, on the bank side, right? They're numbers.
No.
When you're dealing with a mortgage broker, there's that loyalty, right? We are loyal to our clients, and we're going to do best by our clients.
Right.
It isn't always about rates.
No.
We're seeing some crazy offerings out there that you have to be super careful about. And we don't offer those because the exits on these types of mortgages come with massive fees.
Yeah.
So what's better, the low interest rate going in and then an extreme high interest rate going out? So one way or another, you're paying that extra bit.
And that's
So-
what kills me, those fine lines.
That's it.
People don't able to understand that time until it's get impacted, right?
Yeah.
It might go flow through whole term
Yeah.
and
yeah.
nothing happen, but you always have to look into what can happen.
Yeah.
Well, in that condition, one situation right now which is happening a lot, and people asking that questions is, given the Bank of Canada's current stance on interest rate, what should prospective home buyers consider when deciding between fixed and variable mortgages?
That is the question of the day, of the year.
I know.
Look, the real answer is it depends, right?
Mm,
So our clients, it depends on their circumstance,
right.
their debt level, their risk, their age, their circumstance. Are they expecting to move in 2 years? Are they
Right.
staying put? Are they so? When we're advising our clients on their options,
Right.
we've already received all this information from them
Right.
as to what their goals are.
Right.
So to blanket everybody and say this is the way to go right
Yeah.
now. Um, Personally, I would not advise that way. Myself, what would I do?
Right.
Variable versus fixed.
Fixed,
So
yeah.
I can answer it
Yeah.
that way.
Yeah.
And you know, I'm of age. I'm in my 50s.
Yeah.
You know, our mortgage is relatively smaller.
Right.
We're a little bit more risky.
Right.
We don't plan on moving. Um, Variable for me,
Yeah.
you know. But a client, perhaps a first-time home buyer,
Right.
I would suggest going halfway
Yeah.
and maybe doing a shorter term, maybe a
Fixed rate.
3-year
Yeah.
fixed.
Yeah.
Let's see where this economy goes in the
Right.
next 2.5 years.
Right.
But look, if you can't sleep at nighttime and a 3-year fixed, you're thinking, oh, what if there's another black swan event and things
Yeah.
blow up? Well, then the 5-year fixed is appropriate for that particular client.
Yeah.
So a lot really does go into that question.
Right.
With every single client, we would never blanket it and go, this is the way to go. Yeah, like it's a real personal thing.
It is like, it is a very personal thing because reason like, I'm dealing with every day. But even for me to make that decision, you have to think about it like, okay, what's going to happen? Best of our knowledge, best of the information I have, that's how we make a decision.
That's it.
But still, I consult with mortgage broker like you that, here's my scenario. What do you suggest? Right.
Yeah.
And your answer is always is like, okay, it's what's your risk taking ability, right?
Yeah.
And I'm kind of person, I'm kind of a little bit conservative kind of person. I need assurance. Okay, this is what's going to happen, and I don't have to worry about, right?
Then you work around your budget.
Exactly.
And yes, you're going to hear that your neighbor and your cousins and your uncles and your brother is, doing so well on variable.
Right.
But that's not you.
No.
That's not you. Yeah. So, there comes penalties with fixed versus variable.
It does,
so
right, yeah.
Are you moving? Are you planning on moving in 2 years? If you're planning on moving, well, make sure it's a portable product so that if the rates are too high to break out, then you can port it. Right. But if maybe they're good, and then you can break out of it in a couple years. The variable product has a built-in fee, which is a 3-month interest penalty, which is very comforting to some mortgage holders because they're thinking, if anything ever happens, which, by the way, every 3 years, things do happen in our lives.
Yeah, for sure. Yeah.
You're in a position to either consolidate debt. Look at what happened through COVID. So much debt accumulation, right? Because of the mortgage and whatever. So, there's lots that goes into that loaded question. And I wish I had that answer to say, Vishal, from here on in, this is what your clients need to do.
Yeah.
But look, they've got a great mortgage broker on their side who is going to help them through that.
Right. Well, I think you have to make a decision. It doesn't matter, and don't regret later. And this is like a saying one of my uncle used to say. I said, never regret anything in your life. And my question to him was how you can say that? We do mistakes and we do regret sometimes. I said, well, the decision you made that time based on the best information you had and the best knowledge you had.
That's exactly right.
So based on that, if you're making a decision, so don't regret, because that's the best decision you make that time.
He's a wise man.
Yeah.
That was great.
But the same thing, in life also, the same thing. It's not going on a linear all the time. It goes up and down. Same thing happened over here. So look into, like you said, look into your risk-taking ability. Look into your income. Don't say, am I going to get promotion in 2 years and I start spending right now.
That's right.
On that, or I'm going to inherit some money. That's great. But at the same time, we have to be careful. Have some capability that also have some cash flow with you.
Yeah.
People forget about that.
Yeah.
They go so thin. And that's why they're in trouble right now, because
Yeah.
they got so thin in purchasing multiple properties and stuff. And now assignment after assignments coming, I think which probably going to stop now. But yeah, it's scary.
Yep.
How might this decision impact the affordability of home, especially for first-time buyers? Like, with the announcement just happened.
Yeah, well, so the Bank of Canada's overnight rate affects the prime rate. So
Right.
when you consider variable, it's still high. So
Yes.
the affordability is still higher.
Yes.
I mean lower.
Lower, yeah.
With the fixed rate, so now the bond yields
Right.
are coming down
Right.
because there's more consumer confidence here. So they're coming down, rates are coming down. So that is actually helping the client with affordability. There's more, like you have more maximum mortgage amount,
Right.
right? So that is what's happening there.
So here's my question related to that as well. Is the affordability can be affected what kind of mortgage you're taking, variable or fixed?
So if you're going with, it's always contract plus 2%.
Right.
So variables now, let's say prime is 7.2 minus some discounts plus 2%.
Right.
So we're in and around the 7.25 mark where we're qualifying, like that stress
Right.
test
Yeah,
rate.
that's right.
Yeah. So slightly it
Okay.
does.
Okay.
Yeah.
So
Yeah.
so if I taking let's say 5.5%,
Mm-hmm.
3 years mortgage, and compared to 7.25,
Mm-hmm.
it will impact my affordability.
It's going to impact. We still have to add the 2%. Like that
Exactly.
stress test is there to protect everybody,
Yeah, for sure.
but it's also taken away from affordability right now.
Yeah.
So as the rates come down, it's helping affordability. Yeah.
Yeah, no, it's good answer. Like, I always have that question in mind, and I do know that, but I also want to hear from the expert.
Yeah.
Uh, that's the thing. Well, looking into like your mortgage world,
Mm-hmm.
can you discuss the potential impact of this decision on lenders and their mortgage offerings?
Yeah, we know that during let's say 2022, 2023,
Right.
one of the banks, the big red bank,
Yeah.
really took themselves out of the game. Their
Right.
rates were extremely high. They were not interested in really lending to anybody, maybe AAA clients,
Right.
right? This is making things a little bit more competitive for everybody because banks are coming back to the table. There's discounts, great discounts being offered off of variable.
Right.
Banks are back into lending again. That typically happens after October anyway, after their year end.
That's right.
But we've got year end that happened, as well as these fresh eyes of interest rates are hopefully coming down this year. And I say hopefully, right?
Yeah, yeah.
So yeah, lenders are now coming back to the table. HELOCs, home equity line of credits, were removed for early COVID because risks and whatever. Those are being offered again. So lenders are more confident.
More confident, more products in the market. and
products,
they're getting
yeah.
more creative as well.
Yeah, and what's great
That's
for the consumer is
Right.
there's more competition because more banks are offering.
Yeah, and
Products.
the latest charter which came out, I don't think it's like impacted yet, or it got implemented yet, regarding when you're moving from mortgage from one lender to other lender.
Yes.
No stress test on the existing mortgages.
Okay, that's
Yeah.
a bone of contention for me.
Yeah.
You just opened up a can of worms here. So we were always doing that.
Yeah,
So the government making this announcement, Vish,
right.
is really just saying things that we were doing anyway
Yeah,
and proving
yeah,
they didn't really know what they were saying,
for sure.
right? So when one client moves their mortgage from one bank to another bank, no stress test is used. But it was just really funny. The whole mortgage world, all my colleagues were like, "We're doing that anyway." But it's a great thing for the consumer to know, because what it did was it then brought it to light to consumers like yourself, right? We're like, wow, this
sure.
is fantastic. So
Yeah.
I feel more confident now that I can move my mortgage from here
So
to here.
they don't feel hostage held by a
Exactly.
bank, right? Yeah.
Exactly. Exactly.
Or the lenders, I
Yeah.
guess should say.
Yeah.
Well, this is great news for like most of the people. It already was there. It's like we were not aware of that much.
Yeah.
So in that's a great things because we always want an option. We take it or not because
Yeah.
I don't think like the bank also want that them to go and they able to negotiate on
That's
that
right.
term, right? Because I don't like to move things, from one to other and then dealing with them, all the experience. I'm with the same bank from 25 years.
Yeah.
And every time I go, I get pissed off on them uh, and end up like staying with them
Right.
because somehow like it worked out, right? So it's great to know. Um Other question was that what are your thoughts on the Bank of Canada's policy of quantitative tightening and its potential impact on the housing market?
Yeah, that's, quantitative tightening. Like that's really, a fancy way of them saying we're increasing rates, so they mathematically had to adjust what was
Right.
happening. And that was by increasing the rates, which personally I hated, right? My mortgage was affected. We're variable rate holders. So I hated it personally.
Right.
But on a grand scale, on the big picture, I think it was what we needed. One can, I guess, argue that the decrease in rates in the early onset of COVID should not have happened. We don't know. A lot of should haves and could haves and all of this stuff. I don't care who was in government and power at the time. We don't know what they would have done.
Right.
In the end, we had a nine, I think it was 9.1% inflation at one point.
Right.
That had to come down. So did I like it personally? No, not at all. But on a grand scale, our economy really did need to slow down. And here we are. We're on the other side of it. We good news is we managed, right? Whether it was someone had to sell a home, we survived. We survived it. It wasn't a very painful thing to go through, but we're here on the other side. There is that rainbow. There's a pot of gold at the end of that rainbow that we can finally, set our sights on and start planning for good things coming forward.
Well, you said it right, like, because it's what's needed. And I say, like, a Canadian banking system, that's what we're known for, like, having a little bit conservative or sometimes a little bit more conservative, but at the same time providing a great protection because we didn't see that many foreclosures or, all that stuff, right?
Minimal.
And that's a great comfort. Like I'm looking to the news, like $1 trillion in the U.S., like, and that's about to, it can happen 2008 again.
Yeah.
We don't know, but
we have one of the best banking systems. It
Yeah.
has saved our bacon.
right,
Like in 2008 when the US was in massive trouble and we were all anticipating, doom and gloom here in Canada, the bank's system is actually what saved our bacon.
Yeah.
So our policies are strict and we, our verification systems and all the rest of it, but that is what has saved us.
yeah,
And again, we can argue whether, Tiff Macklin is doing the right thing or not. I don't know who would have.
whatever he promised, like, I was watching the reel other day, somebody posted and was criticizing it, like, the interest rate's not going up. And,
That was a big beef. That was a big beef. Early 2000, April
Yeah.
2020. Yes, interest rates are not going up for the next 3 years.
Yeah.
And not even 8-9 months later, we're seeing interest rates just go up and
that's
up
why
and up.
I'm saying whenever you hearing that news or announcement, take as a grain of salt. Don't take as it's written on stone that that's going to happen. Always be considerate about your situation and what the words can happen. So
Yeah.
we had to hear somewhere, but then ground level, different level, like you mentioned before, it depends on person to person. People who had that leeway, even like those people had trouble. I know, like so many of my clients, they own multiple properties and book the new build.
Yeah.
And now this year when come out and they say, hey, I have to put an assignment. If the assignment not allowed, I have to at least rent it out because I can't
Yeah.
keep this one over here.
And they weren't
No
able
question.
to sell.
Right? Yeah, that's right.
Yeah.
Well, that's the other story.
Another story for another day.
Another story for another day with tenant and all that tenant board things. But yeah, it's we already talk about like we already seeing it like and how it's going to impact the spring market. This decision, but in my opinion, and you maybe agree or disagree with me. I think you're going to agree with me that it's going to be good spring market.
We're seeing it already. Our spring market as mortgage brokers start in January.
So spring has sprung.
Spring has sprung for us. We had a bunch of files that, went silent.
Yeah.
Just we keep in touch and
Right.
how's everything going? And now they're coming to the forefront again, which is nice. Again, that boost of confidence.
I know we discussed this over here, but I'm just reframing that question again. Given the current economic conditions and the Bank of Canada stance, what advice would you give to someone looking to buy a home in the near future? Like if they're not ready right now, let's say, but 6 months, 1 year, what they should start doing?
Big thing is know your numbers.
Right.
And I'm not just talking their pre-approval numbers. What is your credit score? Understand your numbers.
Right.
Put your power team together.
Right.
Because before you know it, 6 months has passed.
Yeah.
It goes like this. And I tell our clients that all the time. You understanding where you're going, but you need by knowing your numbers.
Exactly.
Right? Gone are the days, I hope, of people putting offers on properties and then having their bubble burst, right? Nothing worse than that, than being the broker that has to say that, I'm sorry, your client doesn't qualify for this. And they've put an offer in and you've now, your seller is anticipating all that anxiety that goes into, getting an offer and accepting, and it's all gone out the window, right?
Yeah.
So the knowledge is power.
Yeah.
Your numbers is power in this case. So
be prepared.
Be prepared. The pre-approval is most important, and be sure that it's actually a pre-approval,
Right.
not just like a
Verbally said that.
Yeah. Oh, this is this.
Yeah, my bank said that. Like, I'm
Yeah.
okay. Financing
Yeah.
is not a problem.
Yeah.
And turned out like they didn't get anything, and now they got stuck because they didn't count it that the big purchase they have made a few months ago.
Nobody verified their documents.
No way for
So a pre-approval is actually going through, pulling credit bureau,
Exactly.
verifying income. Like, so what if we have to ask for a letter of employment 6 months before?
Yeah.
But at least we are verifying that your income is going to be accepted, right? You're not on probation. There's nothing, no hiccup on your credit bureau.
No.
So many times, please don't pull my credit bureau because
It's going to impact my...
it's going to impact. And that's another big myth, if I could speak on that for a second here.
Sure, for sure.
For the purpose, your credit score will be deducted slightly when we do a pull, for
Right.
sure.
Yeah.
But for the purpose of a mortgage, it recalibrates again in 40 days.
Right.
So it's not like you're losing, 80 points. It's minimal. Four to 6 points is what will be affected,
Right.
which is another reason why if you're close to that 620, which is not good,
Right.
that a broker, we only pull it one time. So if you're running around doing your own shopping and going to the green bank and the red bank, the blue bank and all of that,
Right.
your score will be hit each time. Okay. It will recalibrate, which is the good news. With us, we will pull it. We will let you know what's on it. We'll sit down. We'll advise you on
Right.
anything that is on there. But it's just the one hit and it will recalibrate
Yeah.
itself anyway.
No.
So be prepared.
Be prepared.
Know your numbers
Right.
and build your power team.
Right.
those are what I would say to that question.
Sure. I know, like, we know the answer and a pretty basic one, but I'd love to repeat this one because people don't see that way a lot of time because they just look into their income. But what they don't look into that what their spending is. So talking about TDS and GDS, right?
Yeah.
Like in how much you're spending, how much you're saving, and that's how bank qualify.
Yep.
You know, what's the maximum they can do and what the good to have in order to get approved and everything. Can you put some light on TGS, GDS, what they are? And
Sure. So
yeah.
so GDS, TDS, gross and your total debt servicing.
Right,
So
yeah.
GDS is your gross and TDS is your total.
Right,
Total is all debt.
right.
Okay. Gross is your housing costs.
Mm-hmm.
So that percentage to income maximum we can go to 39.44. So I don't suggest people go to their maximum. And in fact, we often give them a little quiz with our application when we ask them what their budget is. So they will give us what their budget is. And it's like, Angie and Victoria,
Right.
we can only spend $2,500 a month on our total housing, mortgage, interest, taxes, all of that stuff. And then we run their numbers, but their maximum with their income for that 39.44 will allow them 3,500. If their budget is 2,500, I'm going to dissuade them from going to their maximum
Right.
of 3,500 a month. So be mindful and build that budget prior to sitting down, prior to going shopping with you, Vish,
Yeah.
because people are going to fall in love with houses. And
All the
then
time.
all of a sudden they can afford this extra 400 or 500. Oh, we can do it.
Yeah.
But you've told us that you don't want to do it. So what has changed? So yeah, creating that budget ahead of time so that you don't fall in love with something and then all of a sudden you think you can afford this.
Yeah, for sure. Like, because a lot of people have that misconception in their mind, and it's challenging as well. That I'm making 120 grand, and I'll be okay. Not necessarily. I
happens.
have seen people who have a 300,000 income, and they didn't qualify, and they're like wonder why, because their income is like so good, but they didn't qualify.
Lots of debt.
Lots of debt, like
Vehicles.
yes.
We recently saw a first time home buyer with a $75K car loan. Why are you buying a $75K car loan? Why are you buying a $75K? Why do you have to drive these fancy cars right now? And any financial planner would say to you, like, the second you're driving that car off the lot, it's decreasing in value.
All right.
And you're wanting to get into the housing market.
Yeah.
Like priorities, you know.
Isn't that all these authors like Napoleon Hill, and even Buffet and everything, like investors like they say, like don't buy depreciation asset, right?
That's it.
But people don't think that way because they have to buy because neighbor bought it, or they have to show off, like saying so many times happen, and I surprised myself that people have. I know because we go through their financials a lot of time, and I look into that, and somebody's driving Range Rover, luxury car.
Yeah.
And I said, why are you doing this to yourself?
Yeah.
But hey, you know what? That's people's choices.
It is.
What they wanna do.
I was you took the words out of my mouth. To each his own.
Yeah.
But if you're in the market,
Correct.
and if you're of the age that you think you're going to be purchasing
Right.
in the next 5 years,
Right.
maybe not a brand new vehicle.
Okay.
Right? And especially you've put a property, another thing,
Yeah.
you've put an offer on a property and it's been accepted. Please don't go car shopping during that time.
What about the furniture shopping?
And furniture shopping? Well, you know that.
Oh my
in your
God.
days.
I was about to spend because I like this stuff, and I was about to put that on my card. Then it came to my mind, hold on. I'm spending this one over here. I can sleep on the, just on the mattress on the floor, no problem. But let's wait. Let's go through. Then I'm going to order my bed or my couch, which I love it.
Like, there's always a pain point.
Yes.
right?
I wish it not go away because but it's Costco. I might get it. So, yeah, I was like, kind of, I think, oh, I love this one so much. I want it. But at the same
Now,
time,
we need to
yes.
assess the wants and the needs,
Yeah,
right?
that's right.
But if you're in a position to do that, why not,
I
right?
know,
But if you've got an offer on before you sign anything, any other loan, any credit, put anything on credit, you please call your mortgage broker,
Yeah.
please, because you really don't know how close you are to losing that offer from the bank, and then you're bumped into B side, and it's a
You know,
mess.
the biggest surprise I get, like, when my client says, I didn't know that my wife bought the Gucci bag for, I'm like, what? You didn't know? I'm like, yeah. And I go, you guys not on the same page? What you should be spending right now, or she could wait for that.
That's a good point.
Right? And that's why the communication is such an important thing, like, for all the parties involved in there. So many times happen, like, because there's always like a one person who's making a decision, right? Not both making. They agree to it, and the family decision making. I prefer talking to both of them and keeping communication line open for both of them.
Yeah.
Because you never know, one come out like, I didn't know about it, and he made the decision, but I'd sign it, like, I didn't know about it, right? So having that communication line, and especially if you're on with the partner, definitely keep that communication, keep it clear that what not to do.
Yeah. And they have to be aware that even though there's an accepted offer and a commitment,
Yes.
the lender always has the right, even right up to the last day, to pull credit again.
Exactly.
Especially if you're just like over your allowable amount and there's some exceptions that were being made. The lender could go, let me just check on these people. So be careful.
Great point. Like, so I'm just keep on, because it just recently happened. So keep giving my example. What happened? I decided this is the rate I want, and this is for this term I want. And I say, yeah, I was going to vacation. I'm like, yeah, just do it. While on vacation, I was got the thinking about it and say, you know what? I want to go the other way. Long story short, like, when my lawyer gave the document and said, I want to change this. And it was like, I have my closing on 30th, and it was day before yesterday. So I called my mortgage agent and say, hey, can we change that? And she said, I can, but at the same time, I advise you not to do it, because it's not making a huge difference for you. But it may happen that they will do recheck again.
Yeah.
And that can halt or can delay your closing. So I'm like, aha, that's a great point.
Yeah.
So I thought about it, and I said, okay, you know what? Keep it as is. And because I'm not doing it for long term, and if it's happening, banks allow us to 6 months before you can do the early renewal and stuff. So if the rate changes, that will be okay. Like, I can at least save for those months, right? So, good point. Now, big question: how can potential buyers prepare for future possible rate increase?
Thankfully, I think we're on the other side.
Right.
But I think what we've learned in this last little bit is to maintain our budget, stay on budget, right? Things were so cheap in 2020, things, that everything was put on credit cards. So eliminate the credit card spending. If interest rate hikes is a problem, you're probably not going into a variable product.
Right.
You're probably going to stick with a fixed rate. So sticking to the budget, I think, is the key in this.
Right.
And just keeping in touch. If you're in the market to purchase a home or renew, or your renewal's coming up, stay in touch with your mortgage broker.
Yeah.
Because we've got our finger on the pulse on what's going on in the market all the time, like we do that daily.
Yeah.
So How to prepare is really stay on budget. We talked about, speaking to a broker earlier for a pre-approval, building your power team,
Right.
speak to yourself, what's going on in the market, and maybe not take everything you hear from the media.
That's a big
Maybe
one.
not the place that I would say that's
Yeah,
your
don't get
main
too
source.
excited. Don't get too excited, and don't get too depressed either.
Yeah.
That's why I would say, stay neutral. Like I said, take it like a grain of salt, but do consult with professionals
Yeah.
who doing this thing every single day. And
Yeah.
sometimes they find it like difficult to predict things. We stop predicting. It's
Yeah.
we only look into the numbers and what's happening in the market and what may can happen.
Right. Right.
But not necessarily like it's going to happen. So
That's right.
um, we already covered that, strategies buyers can use to navigate the current interest rate environment. But anything you want to add on that?
No, I think it's just, knowledge is power.
Right.
Understanding your numbers right from the very beginning, understanding what your income will allow you, just so that you have an idea.
Right.
And, we can give you numbers. You can give them
So-
what values of the properties
So now I'm
are.
putting it because some of the questions, it's look like a repeat, a different thing. Let's put some examples so it can be more simplified for people.
Sure.
This is the scenario. This was happening. So I'm a first-time home buyer. I never purchased a home before. I don't know anything about variable fix. I'm kind of person who because I get salary job, have a fixed income coming in. At the same time, I want to know my budget. I want to spend like a fixed thing
Yeah.
over here, right? I'm balanced kind of risk taker, not too conservative and not too spending kind of person. What do you suggest to me?
Well, what I would suggest after we go through our intake, of course, and understanding more about you and everything,
Right.
we will give you all options
Right.
based on, a 2-year fixed, 3-year fixed, variable,
Right.
and then we will go through those options,
Right.
the pros and cons of each one.
Hmm.
I would think we'll probably settle somewhere on a 3-year fixed if I were to look at the file today.
Right.
My underwriters may have a different way of looking at it.
Right.
But I would say, based on that scenario, I would probably say that's more like a 3-year fix.
3-year fix,
Watch the market, see what the rates are doing,
Yeah.
and then 2.5 years later, give us a call again, and then we're back at the looking at what's going to happen
Different
at
on
that
that
point.
Yeah, that's good.
Yeah.
Here's the second scenario. Look into that. I own multiple properties. Now I'm thinking of buying another one. We've seen the rental market going up high. Demands are there. People need the space to live. But at the same time, the rent is not going to cover my mortgage, which is not happening. I'm not
Yeah.
positive cash flow. What I'm hoping that is going to be marking the shortage for the housing and everything, and I'm going to, or maybe I can get a good deal right now based on like a last year numbers. And now I want to purchase. What do you suggest me? Like what interest rate or what type of mortgage should I take?
I would say shorter term,
Yeah.
right? Because real estate investors prior to this were notoriously taking variable rates, right?
Right,
Because
yeah.
they're buying, selling. They don't want to deal with that 5-year fixed
Yeah.
penalty.
Right.
They want to have control of their portfolios.
Right.
I would still say, based on the economy right now, we're
Right.
not seeing variable coming down as fast as what we're seeing
Right.
fixed.
Yeah.
So because of that uncertainty,
Yeah.
sit with the budget, because that that shortage,
Right.
given that you qualify for the additional property, that extra shortage or cash flow,
Yeah.
think of it as an investment into that property, an extra $100. You'd have to be comfortable with that extra for a period of time before, you're able to increase your rents, right? So
right.
again,
No,
it depends. It all, we
it
always
is
come
like,
down to
and that's
that.
why, like, putting the scenarios over there.
Yeah,
So
yeah,
people in those situations, we cannot cover all the scenarios because it's all different. But I'm thinking most common one, like
yeah,
that's what
yeah,
happened, how people thinking. So majority of the time right now, what I hear from you is coming out having a short-term fix with the
yeah,
right way to go, rather than looking to the variable, because it may not decrease, uh, but it's like, a slower pace.
time. It's gonna take
It take
time.
time, because I know a start of like a last year was saying like 1% decrease going to happen by the end of 2024. Right now it's not necessary, because it might not second quarter, even quarter percent happen in April, maybe happen. They
Yeah,
might stays the same and may happen in second, third quarter, right?
yeah,
So
yeah.
looking into that, like a maybe 0.5%, maybe,
We
right?
don't know. We
We
don't
don't know.
know. Like there could be another black swan event.
Yeah,
Who predicted a pandemic,
right,
2 wars?
right.
Like there's been so much that has
And
happened,
it's an election year.
and it's an election year, which we're going to hear a lot of promises.
Oh, for sure. I
I
already
can't
seen that.
wait.
I
Yeah,
know. I love that. Like, the other day I was looking to that, that about auto theft and things happening. They made the announcement. They want to sit down with everyone,
hmm,
province and everything. I'm like, now, like, what happening from since COVID? Like, you haven't
yeah,
do anything. You didn't do the spending on anything, and now they want to do it. Anyway, those are politics, promises, and everything. Um, so all this over here to my last question, maybe not. How might this decision impact the economy as a whole, and what could be potential knock-on effects for the housing market?
well, I think what we are going to see, what we are seeing, is an uptick in buyers out on the market.
Hmm.
Are we going to have enough supply?
Hmm.
We don't know yet,
Yes,
right?
we do.
Because you brought up real estate investors earlier. They have multiple properties. I know our real estate investors may be selling a few of their properties because they didn't cash flow over the time frame, and they didn't want to sell and lose their shirt, so they
Hmm.
held on.
Yeah.
But maybe the spring market, then they'll be able to unload some of these properties just to feel a little bit more relief.
Yeah.
So I think that what will happen is we're going to see more activity.
Hmm.
Yeah,
Yeah.
that's
No,
it.
that's and I think like you said it right, because the kind of more the buyer is going to be, and now sellers say like, because mindset switch overnight to buyers and sellers. When buyers see like, the property is staying a little bit longer, say, yeah, I don't want to buy it right now because it's going to go down more.
Mm-hmm.
At the same time, like this, but seller sees like, it's slightly increasing. He say, wait a second, I'll wait. Probably I was thinking of doing it. Let's increase the price. Or now I want more, right?
Yeah,
Before they were
yeah,
settling for less, right? And now they say suddenly their mind change, and we're going to see that
yeah.
as well,
Yeah,
right?
I think so too. I think the sellers will now be requesting a little bit more,
Yeah.
and that's where you need your expertise.
And that's why they say like, buyers not winning in all that scenario. Even
Yeah,
everybody's trying to help them, and so that when the interest rate go down, prices go up. When the prices go
yeah,
down, interest rate goes up. So ultimately, it's come out like the same way. So you're
yeah,
putting a lot of stress, a lot of thing over here. But in the start of that, like you said, depending upon when people are ready,
yeah,
look into their budget, look into that, not only look in the budget, but also the upcoming events in their life, baby coming, right?
yeah,
The kid is going to university.
yeah.
They might be thinking of purchasing a new car because there's only one car and the other partner have to commute. All those things take
Lots
into
of that's
consideration
right.
into when you're doing that. So, well, great chat, great
It
information,
was.
just like always, like, with your expertise. And I like that lawyer kind of answers as well. It depends.
It depends.
So, what the future is going to look like 2024? It depends. With that, Thank you for watching our Real Estate Wisdom podcast, and really appreciate that if you put your comments, like, share, and don't forget to subscribe to get continuous flow of real estate wisdom, not only just coming from Realtor, but the industry's professionals. So we are on Apple Podcast, we are on Spotify, and we are on YouTube channel. So subscribe to it. At the same time, I will say, keep smiling, keep the hope, and everything will be good. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.